Hey, welcome to Conscious Crypto. I just recorded my why Bitcoin ETFs might not be a good thing video. So I'll be dropping that soon. Be sure to like, subscribe if you want to take a really well-researched insight into how Bitcoin ETFs are kind of the antithesis of what Bitcoin stands for. But everybody's cheering them on because they want the value or the price of their Bitcoin to go up. So I'll pull slightly from that narrative right now to explain what is happening at the moment and give you my base case scenario for keeping this bull run intact, and then where I would be fully convinced that this bull run is very different and is likely over. So let's start right here. Benjamin Cowen, just to calm our fears and allay the pressure that of course the market is putting on us. And we'll take a look at Benjamin Cowen. He goes, as measured peak to peak, Bitcoin is outperforming the last two cycles. At this point in the last two cycles, Bitcoin was still about 40% down from the all-time high. So to put that into perspective, it would equate to 42K if this cycle were at the same spot as the last two cycles. So again, we are ahead of schedule. That narrative is because of the ETFs. So we did see a spike when the ETFs were finally approved, and then we saw a sell-off. Before, over the course of 20 weeks, we saw a year and a half worth of Bitcoin being purchased. In my video prior to this, I gave a quick peek at this narrative that, hey, we may not hold this level. Let's take a quick look. Now, it's very interesting because, yeah, this is a strong, good support area, great for a bounce, but I'm not fully convinced that we're not coming down lower, while also keeping the bull structure intact. So again, this would be the real invalidation, is around 40,000. And I also would invalidate around here, but I could see us coming into this zone. And I'd say if we close on a weekly below here, yeah, I'm probably taking all my cards off the table. But if we come down here and I start seeing bullish activity, I'm probably adding to my position. Let's come back and look at what everybody is talking about as we came down to this place yesterday, clearly seeing a bounce today. This is CTO Larson. This is Invest Answers. I like James. He helped me really understand. So in that video, I had showed that here on the daily, there was this idea of a inverse head and shoulders, and that this was a strong level to hold, where we've clearly broken that level. And now we're testing this low. Once again, it's still possible that we get one final washout to recover this liquidity. Now, this is showing vector activity or high liquidity candles, and this is liquidity we still have to recover. On the daily, sure, but it stands out far more prominently on the monthly, that there's this entire candle full of liquidity that needs to be recovered. Now I'm going to show you a quick playback of why this is so important to follow. Notice this yellow bar. Notice these green candles, green, red, purple. These are important candles with high volume, high transaction counts. That means that there is unfinished auctions or an imbalanced market. And just like nature, the market wants to seek harmony. It seeks balance. So here's our 2020 into 2021 run up. All-time high hit. Notice the yellow, orange being recovered. Boom, again. And then, oh, we left some behind up here. So now we're going to go back and get that. Boom, recovered. What's happening now? Oh, all-time high, and bear market begins. Still has some liquidity to recover here. It's going to take its time, exhaust itself out. Oh, boom, chicka boom, ate it up. Gobble, gobble, gobble. Now watch one last time. Here we go. There. Now we're going up to reclaim this leftover liquidity. So you can see that is how the market works. Now we'll play it through. These are monthly candles being played out. And there you have it, right? Came back and ate this liquidity, and we still haven't eaten all of this liquidity. Now, does that mean we come down to $40,000? Potentially. potentially this time, or like we saw here, maybe in our upcoming bear market, do we come back to 40,000 and reclaim that liquidity? So that is again, my base case that this would be a strong buy zone for me. And again, here. Now to move deeper into that, I'm not the kind of guy that's, was like, whoa, why did Bitcoin dump? I'm like, show me the charts and I'll tell you the news. But here is some after the fact news that Germany, having paper hands, dumped 20% of their Bitcoin holdings in the last few weeks and continues with about 40,000 Bitcoin left. So a lot more to come there potentially, as well as a lot more to come with Mt. Gox, a now defunct exchange that filed for bankruptcy and is finally making its users whole. So again, here's the narrative. There are very smart investors in Bitcoin right now. Sovereign wealth funds, corporations, insurance, companies like MassMutual, people like MicroStrategy, Galaxy, Tesla, Coinbase, Block, the Winklevoss twins, who at one point, right, owned 1% of all the Bitcoin in the world, buying $11 million worth for $10 a piece. Imagine you had purchased Bitcoin at $10 and you had 100 Bitcoin. Would you not think about maybe selling a little bit at all-time highs? Being like, oh man, we've seen this level quite a bit. We've seen this area quite a bit. Maybe I should just take a little bit of money off the table, reinvest it into something else, make it liquid for a business venture or real estate venture, what have you. So this doesn't surprise me at all. MassMutual adds Bitcoin to balance sheet via GBTC ETF. El Salvador, is their bet paying off? They, or specifically their president, made Bitcoin legal tender, money that you had to accept in their country, and bought Bitcoin and mines Bitcoin to put in their reserves. And I still believe they'll probably be one of the richest, most stable countries into the future for it. So of course, institutions and smart money is in Bitcoin. I mean, just take a look at the classic Wyckoff distribution pattern that occurred back here in 2021. All right, take a look at this. So you don't understand Wyckoff, I'm about to show you. Now, Wyckoff, legendary technician Richard Wyckoff, wrote about financial markets in early decades of the 20th century at the same time as did Charles Dow, Jesse Livermore. These are iconic figures, especially regarding market analysis. Now, his pioneering approach to technical analysis, known as the Wyckoff method, has survived in this modern era. And technical analysis was never this popular. I'm telling y'all, never this popular. So the fact that we are still speaking about him now when he came up in the 1920s is exceptional. His first rule, and to me, the reason why people like to look for him is because he follows smart money, institutional investors watching the big players. Wyckoff pointed out that the big players in the market, like large institutions, often manipulated prices to benefit their trading positions. Spotting these tactics can be key for traders, especially to foresee major changes or drops in prices. Here is Trading Views show of Wyckoff method, right? Now take a look at this. See this higher high here? High, higher high, higher high, then comes down, retests this base, then breaks, then shows a move like, oh, we were faked out, but then continues down. Take a quick look at that. Now look at this. Boom, low, higher high, low, higher high. Whoops, breaks market structure, rallies a bit, drops. Here it is side by side, right? Comes up, comes back down, boom. Comes up, boom. Comes back down, comes back up, then drops to support, breaks that support, as you see here, has one more rally up, like, oh, that was crazy, let's get back in, and then capitulates down, okay? So yes, according to Wyckoff, who was always watching smart money and institutional investors who manipulated prices to benefit their trading positions, saw this happening. This is all to say that yes, institutions are here, market manipulation is real.
Meh, it's real.
But the truth is, we need to understand that market manipulation is real and they're manipulating our emotions. And that's where we have to stay level-headed when things get turbulent. So yeah, let's take a look at the volume range profile. Okay, so here we could see there's a ton of transaction volume up here, right? This is at these specific levels. This is increasing volume, especially compared to here. Not a lot here. And this also shows an imbalance in the market that would like to be reclaimed so that we can get more volume and balance out the fact that this is heavily weighted and this is heavily weighted, but our center area is not. That is the market, again, seeking harmony just like nature. And as Lao Tzu said, Nature does not hurry, yet everything is accomplished. No hurry here. Everything is accomplished. So I want to remember Wyckoff's rules in saying that this bull market is still intact if we maintain $50,000 on a weekly closing basis. It is possible. Notice the support here, right? Strong zones. Boom, price couldn't break it, drops, breaks through, drops through, comes back, retests, breaks. Here as well. And then again, another area of interest is down here at the 40K, which we saw all the way back here as support, as support, as support, as support, as support, as resistance, as resistance, as resistance, and then again over here as resistance. And it's even more relevant that it's closer. It is definitely more relevant that it's going on closer by. Now, I won't be stoked to see a daily close down here, but it's very possible, especially considering on the monthly, that's only 50% of the candle that it would be recovering by coming down to $50,000. Half of this candle is still liquidity yet to remain. So the question remains, do we come for that here and now in this year, or do we wait until late 2025, 2026 to enter a traditional 1-year bear market and then reclaim this liquidity, then seek balance in our market? Either way, I do bet on Harmony. Speaking of bets, the Bitcoin halving. Please go watch my other videos, the last 2 that I dropped regarding the halving and the price action theories. This one here, the first halving, happened in November 2012. Notice that the bear market didn't occur till 2014. Second halving, July 2016. We didn't see a bear market until 2018. Third halving, May 2020. Then the bear market started in 2022. Fourth halving, April 2023. If we go on this 2-year rule that we see here, it is likely that we will not see a bear market begin until 2025, right? So obviously we're not there yet. That is everything. This has happened repeatedly. Being a contrarian and saying this time is different is fine. Sure, you can do it. I am a contrarian trader. Honestly, investing in crypto though, it's already enough of a contrarian position. No need to overdo it here. It's as if this cycle is being handed to us one last time saying, hey, if you can just tough it out for 3 years, I will give you the opportunity of a lifetime and possibly generational wealth. When in doubt, zoom out. Does this not all become a lot more manageable when you see it on a monthly time frame or a weekly time frame? They're like, oh, okay, I remember this journey. Like every tick and every second, every minute, like, oh no, that would have been too exhausting. But when I zoom out, oh yeah, I remember this journey. And I remember what I felt like when I was buying here and I felt like selling here. I was like, oh wait, I thought that was the bottom. This is all about hindsight. Here's our halving, April 20th. So if we take from this point, 52 weeks, right? 1 year of upside, 1 to 2 years. Let's go 52. So we need 102 bars, 104 bars ish. Okay. So here's our halving. Let's take 18 months from now, not even 2 years. 52 weeks in a year. Times 1.5 is 78 bars. October 2025. So we have a ton of time, right? We have a lot of time to wait and see what happens. We have a lot of time to retrace and still see more upside. It would be strange to end this bull run so early. And let's remember Wyckoff, the master of spotting market manipulation. His first rule is that the market and individual securities never behave in the same way twice. Rather, trends unfold through a broad array of similar price patterns to show infinite variations in size, detail, and extension. Then when trading options in the financial markets, there is a term called max pain, which is essentially the price that causes financial losses for the largest number of option holders at expiration. Okay. Max pain, or the max pain price, is where most people will lose money, and that is where the price tends to go. That is manipulation. So if there is an essence of max pain, then why not max greed. So if there's something called max pain, what about max greed? Well, then I guarantee that we can bet on max greed. And now we have slipped back into fear. This is a phenomenal reset of the market. We were last month greedy as ever. And then last week we moved into fear. Then we found some neutrality. Now we're back in fear. This is the max pain. So if there's max pain now, what's the other side of that spectrum? Max greed. And I always bet on greed. The greed of market participants to want to make more money. So at the end of the day, you must ask yourself, what is the greater pain? Panic selling now just under $60,000 to maintain what gains you have accumulated thus far? To save face for the temporary pain of a drawdown in your portfolio now? What is the greater pain? Selling just under $60,000 now? Or foregoing the opportunity to see Bitcoin pull back and then skyrocket over $100,000, thus doubling your money, assuming you're not even in higher return assets like altcoins, Ethereum, Solana, and so on. At the end of the day, find your greater pain, build your base case, and trade infrequently. But when you do trade with conviction. And remember, y'all, what's the point of making all this money if you lose yourself in the process? Like, subscribe, and look for my next video about why Bitcoin ETFs aren't such a good thing. Toodles.